My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. My friends, I'm just trying to make a little bit of money here. My job, not just to entertain, but to teach. So call me at 1-800-743-CBC. Tweet me at Jim Cramer. The whole world seems to be slowing down. Rising oil prices, fewer hires in the office, lack of new construction, tepid trade, waning hopes for a deal with Iran. These are the things I hear about. Each day has its own set of horrors. Today, Shake Shack got crushed after missing the quarter. Burgers too expensive? Whirlpool got annihilated as it talked about recession levels of appliance demand. Suspend its dividend. Even Planet Fitness told you people aren't paying up for memberships like you used to. It seeps into the average. Dow losing 314 points. S&P slipping 0.38%. NASDAQ declining 0.13%. Yet despite these negative headlines, most of which I disagree with, by the way, the market can't seem to give up the ghost. On days like today, it feels like all we're doing is taking a breather from the miraculous upturn. It has so many people puzzled, while others keep castigating the rally as something from the bad old days of the dot-com boom. I'm getting tired of that one. When the whole internet edifice boomed, then collapsed under its own weight. Where were they when that happened? I was underneath it. I want to use this day, a down day, to explain what people are getting so wrong about this market. Now, don't get me wrong. It wouldn't shock me to have more than one down day, given that there's been so many stocks that are parabolic. We need a little rest. We want stocks to cool off. In the end, I can't deny that this market shares some traits with the end of the dot-com era, the lead up to the crash in 2000, the most obvious of which is the velocity of these rallies. There are so many stocks that have traveled straight up, which is why we've been reluctant. I can tell you, if you remember the CNBC Investing Club, you would know some things are too hot. We've actually been taking a bit off the table because we don't want our stocks to go parabolic and then go down. Instead, though, we've been focused on what's zoomed too much and wondering if it might be not a bad idea to do some selling. Do we trim some CrowdStrike after it jumped 8% today? I thought about it. Is it time to part with some Microsoft after it lifted its head into the low 40s? It came to mind. But even though I want to take some profits for the trust, I absolutely don't believe that this market's going to roll over and play dead, stay down, at least not anytime soon. And that's not because I'm counting on the war with Iran ending. Doesn't seem like that's about to happen soon. I'm not counting on lower rates either. If we get a strong employment number tomorrow, I don't know how Kevin Warsh, soon-to-be Fed chief, can convince his compadres to cut rates. No, my faith in this market comes down to the opportunity to get you involved in what one of our guests is building tonight. And I'm talking about Nvidia's Jensen Huang, presciently and correctly the man who called the fourth industrial revolution artificial intelligence. Right now, my sense is that the average person in this country has very little idea that there's a revolution going on. The idea probably just seems laughable if they learned about it, just like most people originally didn't notice the implications of the steam engine or the power loom when those inventions started to transform the entire global economy. They were dismissed often. The way I hear this revolution dismissed now, the way I hear it, myself dismissed. Jensen, the first to see the possibilities of AI and accelerated computing, is an amazing teacher. To demonstrate the sheer size of his revolution, he likes to talk about it as a 5-layer cake. So before we talk to Jensen and Wendell Weeks, the visionary CEO of Corning, which just entered into a gigantic partnership with Nvidia, I got an idea. Let's go eat some cake, or at least study its layers to help you understand why AI is big enough to pull the entire market and the economy higher, despite the price of gasoline and the erosion of consumer confidence and all that other stuff that I'm sick of hearing about. All right, Gail, get this. Now, not for the first time, I'm taking my cue from Marie Antoinette. Let them eat cake, although she called it gâteau. The first layer of the AI cake is power, all right? We currently don't have enough electricity to light up all these data centers. They need energy like any other business. Some of the biggest and best spenders in the country are the utilities. They have the capacity to spend hundreds of billions of dollars to build power stations and turbines and so much else. Just this evening, Jensen gave $2 billion to a company called IREN, I-R-E-N, not kidding. They're part of this But you know who else is part of it? Take a look at these. These companies are hiring like mad because they know the demand for electricity is rising consistently for the first time in decades. Utilities are a jobs program in themselves. Let 100 Tennessee Valley authorities bloom. Look at this. Bloom Energy. Oh, my God. That's non-combustible energy. Its stock was down today. Maybe want to get some. GE Vernova. How many times do I have to love that? You're going to plug right into natural gas. EQT, Vistra, Constellation, amazing companies. Next layer are chips and semis. We know them as Nvidia, Intel, AMD, and manufacturer Taiwan Semi. But it takes machines to make chips, too, and it takes copper and now fiber to link them together, which is why we also have Corning's Wendell Weeks on tonight. Corning partnered up with Nvidia yesterday, and some would say they're now joined at the hip. Stick around. I hope to make some news about that relationship later in the show. Layer 3, oh, boy, infrastructure. Now, here you're dealing with everything from Caterpillar to Dell, Amazon Web Services, data center builder CoreWeave, more sales, more losses, on tomorrow morning with me. Again, these are all deep-pocketed employers spending hundreds of billions of dollars on people, plant, materials. This is the everyday American opportunity to get a job is in this layer, okay? I know it's going to be hard to go work for Jensen. I mean, there's a smart fellow there, you know? But they got these jobs, you can go to good, you know, you finish school, finish high school, you get a job, finish college, you get a job. I think that's okay with me. Fourth layer, Jensen calls them models. Google, Meta, OpenAI, Anthropic, SpaceX AI. The amount of money these companies are spending is insane. It's like they're rebuilding the interstate highway system like when Eisenhower was president. Maybe it's bigger. Not kidding. Finally, the last layer of applications. These include products made by Palo Alto Networks or Databricks or CrowdStrike or Palantir. People don't like Palantir anymore. What's that all about? There are thousands of applications, most of which seem to be expanding. Look at this. This is just a giant wave of jobs. People say that this industrial revolution is going to wipe out jobs. I give you these creators of jobs. Now, let's consider the cake as a whole. We hear that the state of the consumer is weakening, right? Confidence is waning. To me, that has nothing to do with the AI cake. Every one of these layers I just mentioned is like a giant American jobs program, not overseas, here. They all collectively have the power to keep the country's economy humming. Everybody's focused on AI as a technology, but when you look at everything behind it, this is like the WPA and CCC on steroids. Even if you don't believe in the tech like I do, this is enough make work to give us a real boost. That's why my bottom line is that as the averages go down, you need to get ready to eat a piece of cake, despite interest rates, despite the gloom, despite the war, because you have to ask yourself, what do any of these have to do with the price to earnings multiples of Nvidia or Corning? Joe in Florida. Joe.
Good day, Professor Cramer. I'm a student of Cramer America, and I am here to learn. My question is...
Good stuff.
Good. Sorry. Following their strong Q1 earnings report, this company reaffirmed its full-year outlook based off their software first and quantum computing initiatives. However, management remained prudent with their forward projections due to the uncertainty of the global economy. My stock is IBM. Do I buy, sell, or hold?
I want you to buy IBM. I do not understand why it's all the way down here. I thought the quarter was actually really good. I think it's been caught up with this idea that it's got some software that people don't like. That's nonsensical. I think that Arvind Krishna is doing a remarkable job. And yes, I'll give you the quantum. I'll throw that in for free. All right, look, despite all the negativity out there, I think the AI revolution has enough layers to keep the economy humming right along. You remember the old days when I would throw this? Well, no, I got wiser or more stupid. I can't tell. We've got a big episode of Mad Money coming up. Nvidia and Corning announced a major new partnership yesterday to accelerate the AI build-out across the country, and I'm learning more about it from the CEOs of both companies. Then I'm going to sit down with Corning's top brass and dig deeper in how a 175-year-old company has transformed itself into a leader in the AI infrastructure space and what the roadmap is for the years ahead. That smells good. And they say every dog has its day, including Datadog, which shot up more than 30% today. I'm going to break down what's behind that move higher. There's so much going on. Hey, it's a jam-packed show. I hear all the other shows say that, so I decided to throw it in. Dale Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Oh boy, this is a big week for Corning, the iconic American glassmaker. It's ringing the closing bell here today to celebrate its 175th anniversary. But even though it's old, the company's more relevant than ever. They make everything from iPhone screens to the kind of optical fiber that's used to tie everything in the data center together. Just yesterday, Nvidia announced a major new partnership with Corning to expand their optical connectivity manufacturing capacity by a factor of 10. Basically, Nvidia is taking a big position in Corning to fund that expansion, which is why the stock shot up 12% yesterday. And this is something that's already quadrupled over the past 12 months. Big win for my charitable trust, by the way, for both. Now, let's take a closer look at this partnership with Wendell Weeks, the chairman and CEO of Corning, who's here with us at the New York Stock Exchange, and Jensen Huang, the founder and CEO of Nvidia, who's joining us remotely. Gentlemen, welcome back to Mad Money.
Thanks for having us.
Thank you.
Hey, Jim. Hey, Wendell.
Great to see you guys. Okay, so I want to get right to it, Wendell. Tell me what this investment will do, the partnership with Nvidia. To explain, this is a major, major commitment for you guys. What it will do to be able to help get tenfold optical, that's your number, optical capacity. And what does the tie-up do now that you couldn't do before? You've got a great balance sheet, Wendell.
Well, two things. First, I really thought Jensen said it great on what the purpose of all this is. What he said is about inventing the future of computing with advanced optical technologies. Two, building the foundation of AI infrastructure where intelligence moves at the speed of light. And finally, and both he and I think most importantly, building on the tradition of made in America.
Right. I want to get right to that with Jensen. We're talking about a lot of jobs, great facilities here, and an amazing tie-up. What is the return on investment for Nvidia shareholders and the return on investment for our country?
Well, you know, we're going through the single largest infrastructure build-out in human history. Artificial intelligence is going to become fundamental infrastructure all over the world, and surely here in the United States. It is just an incredible joy to partner with the great American company Corning and just an incredible CEO, Wendell. Wendell Weeks, as you know, has really, he grew up in Corning, and now he's taking it to the next generation. The partnership is really about inventing a next generation data center where the amount of interconnects, the number of GPUs, the amount of interconnects, the speed of the interconnects, and the scale of the computing is just utterly gigantic. And this is such an extraordinary opportunity because we can use these market dynamics to reinvest, revitalize American manufacturing, the first time in several generations. We can also use this market dynamic, this incredible investment that's coming in from the market to revitalize, to upgrade our energy grid, to bring in sustainable energy. And so simultaneously, we're building a new infrastructure, we're revitalizing American technology and American manufacturing, and we get the opportunity also to revitalize the energy grid. And so all of that is simultaneously happening. And our partnership with Corning here is really about the next generation of our data center architecture, where silicon photonics, optical technology is going to be a very, very big part of it.
Okay, so Wendell, right now I feel like when I go into a big data center, it's copper. It's copper everywhere. Now, look, copper does good things, but I always think of fiber as next generation, and you taught me that, and your company taught me that. Can you replace all of it, or is it right now just going to start with Connect, and then ultimately maybe the 2 miles of copper that is in a Vera Rubin goes away and it's replaced with what you make?
Well, where we're starting is it's an and. In Jensen's current architecture, we maintain the copper that's within the server rack, and then it's an and as he creates these very large, low latency AI nodes. But you got the right guy on the screen to ask.
Well, I know, look, there's one thing, Jens, I know you can't overnight
Well, Windows got it right. We're going to scale up these systems so incredibly, it's absolutely in. So we're going to scale up copper incredibly. We're going to scale up optical at a scale that, quite frankly, no optical companies have ever enjoyed, which is the reason why Wendell mentioned earlier, we're going to increase the amount of optical capacity in the United States by a factor of 10. It's going to create thousands of jobs. He's going to build brand new factories. We have the privilege of being a shareholder in the company, and I'm really excited about that. And of course, a big part of our commitment to them is a multi-billion-dollar prepayment that wasn't discussed in the press release, but is something that I'm very happy to do.
Right. So why do you need to do this, Jensen? What are the implications for the ecosystem, and what does Nvidia get that maybe its competitors won't be able to get because of the tie-up?
Well, it's not so much that. It's just that, as we're creating this new AI future and we're building out AI infrastructure all over the world, one of the things that has really happened is we enjoyed the first surge, and of course everybody realized that Nvidia is growing incredibly fast, but it's really important that we bring the entire supply chain along with us. We now have the world's largest supply chain. The scale by which we manufacture these AI infrastructure is unlike anything that's ever happened before, which is the reason why Nvidia is so large today. We also need the support and the partnership of the world's best companies in our supply chain to help us create and realize this future. And silicon photonics and optical technology is a very big part of that, which is the reason why our partnership with Carney is such an incredible pillar in that. I'm just so pleased with that.
Okay, and Wendell, what would you say to a shareholder who says, listen, why do you need that dilution? You've got, the company's doing so well, 175 years, but young. I mean, everything's been going great. Why do you have to have the partnership?
Well, the partnership is fundamentally about technology and manufacturing here in the U.S. But as it comes to the financial side, as Jensen just shared, they're making a direct sort of multi-billion-dollar investment in the capital that it takes to build these plants. And then also, Jensen wanted to be a long-term investor in Corning. And when someone as smart as Jensen wants to be one of my shareholders, the right answer is yes, please.
Well, look, you've been through the 1983. You remember 2000. It was just such a tough time. Well, is this in the back of your mind to be sure that it never happens again?
Totally.
It is.
Totally. So, one of the things about being 175 years old is...
You look younger than that.
I look old. I feel older. So, is that you have to build for the bad times as well as the good. And so when we partner with Nvidia, that is one of the great times where we're going to grow. But as we grow, we want to also make sure we keep the place safe for the generations to come.
Okay, so I do need to ask Jensen. A lot of people are feeling, and you and I have talked about it, but I got to reference it. It's going even louder. The doomers are saying AI is going to kill the jobs. I keep saying what you said, which is that there's been no industrial revolution that we're just many more times the jobs as before. Could you just refresh the American people that this is not a jobs killer? Ultimately, it's going to be one of the greatest creators in history.
AI is driving the largest infrastructure build-out. AI is, of course, market-generated economics coming into our country at a scale nobody's ever seen. It's creating jobs across the entire stack. It's creating jobs at the energy level. All the utilities companies, power generation companies, investing in sustainable energy companies. It's just creating tons of jobs. It's creating jobs at the chips level. For the first time, we have an opportunity to revitalize American manufacturing, bringing in chip plants and chip jobs, packaging plants and packaging jobs, computer manufacturing jobs. And every one of those manufacturing jobs creates 6 other jobs that support them, and not to mention all the AI data centers. This is the first time in history that the amount of manufacturing jobs being simultaneously created across all of these different sectors is growing incredibly fast. Electrician, plumbers, construction workers, their salaries have gone up by some 30%. the number of shortages that we have and the demand for all of these skilled craft experts are just incredibly high. People talked about how AI is going to eliminate software coding jobs because it codes automatically. Absolutely, the latest generation AIs can generate code automatically, but unsurprisingly, the number of software engineering jobs is skyrocketing. Every company is hiring more software engineers. The number of people talked about how new college grads, their jobs will be eliminated by AI.
Right.
Completely false. We're in great demand. Completely wrong. We're in great demand. We see great demand for new college grads who are expert at using AI. And so the most important thing to take away here is that AI is creating jobs. People who are expert in AI are highly sought after. AI is not going to take your job. Someone who is an expert in AI will compete for your job. And so I would recommend that every single layer, from constructions, infrastructure, energy, software company, and all of the startup companies that are being funded right now, this is just creating so many jobs.
Well,
engage AI, get excited about it.
All right, so we were out at Amazon earlier this week. Amazon's talking that they want to build out, and Google's building out, and I got the sense this is a lot of growing competition. Are you ready for it? Do they have an edge as they claim, or the total cost of ownership still seems to be favoring you? Maybe I'm wrong.
Well, we're all growing. This market is growing so incredibly. It's a great growth opportunity for all of us. However, NVIDIA's architecture, as you know, is much more versatile. We're the only AI architecture that runs every AI. And so we're delighted that recently Anthropic has decided also to join the NVIDIA platform. And yesterday, some big announcements with Anthropic enjoying or contracting out a very large number of NVIDIA GPUs. And that's just a lot more to come from that story. And so this is from OpenAI to Gemini to xAI to Meta, MSL to now Anthropic. We're just, because of the versatility of our platform, we're seeing tremendous growth. We also have the opportunity to address the segments of the market that is not related to large language models. Maybe it's related to physics, proteins, fusion reactors, chemicals, exotic materials, the work that we do with Wendell and his team on material sciences. We engage AI in every single domain, from language all the way to physics, to biology, to chemistry, to manufacturing. And so our reach of AI is substantially larger than someone who is just focused on large language models. So the combination of the versatility, the fact that we build everything end to end, and the fact that we address every field of AI, it gives us a really unique exposure, and that's the reason why we're growing so fast.
All right, now we're going to be speaking to Wendell at length about some of the things that we just talked about. I do want to ask you, Jensen, because it's in the news and I heard it today. Will you be going with the President of the United States to China?
Well, I think that, first of all, we should let the President announce whatever he decides to announce. But if invited, it would be a privilege. It would be a great honor to represent the United States and to go to China with President Trump.
Excellent. Well, I want to congratulate you on your partnership with Wendell. If you do go, of course, I wish you the best of luck and a safe trip. If you don't, okay, well, always good to have you. And Wendell, will you stay with me for a second, and we're going to go over some of the fantastic things that Jensen just talked about. I'm very excited about this partnership. I really am. I mean, it's a big deal. It's just a big deal. Thank you, Jensen. Great to see you.
Congratulations, Wendell. Thank you.
Thanks, Jensen.
Thank you, Jim.
175 years. Not bad. That's Jensen Huang, CEO of Nvidia. Stick around for more from the Corning CEO, Wendell Weeks. After the break, you will learn something. I like learning. I don't know about you. Then when he's back to break.
Coming up, Corning's new deal with Nvidia isn't the only thing going on at the great American glassmaker, so stick around, because Cramer's got more to discuss with CEO Wendell Weeks. Next.
Before the break, we heard from Wendell Weeks, CEO of Corning, and Nvidia's Jensen Huang about the new partnership, goal to create thousands of jobs right here in this country. It's a long-term bet on the comeback in American industry. As America marks its 250th anniversary, these are exactly the kinds of companies we want to highlight. Businesses betting on innovation, manufacturing, the future of American industry. And that's not the only big news out of Corning this week. On top of the Nvidia deal, they also held an investor day yesterday. Management issued some very bullish long-term financial targets. The glass maker with major exposure to the data center via its optical fiber said it's now targeting an annual revenue run rate of $20 billion by the end of this year, $30 billion by the end of 2028, possibly of $40 billion by the end of 2030. Good luck finding another 175-year-old company with that kind of growth. With so much going on here, let's get right back into it with Wendell Weeks, the chairman and CEO of Corning. Wendell, before we go into all this great stuff, including a letter from Edison, a bill from Edison, I need to know something. I think I heard Jensen Huang break news about the structure of the investment that wasn't in any release that I read.
I heard the same thing. What Jensen basically explained is that he's actually helping us with the capital for these major new U.S. plants. And then in addition to that, he wants to be a long-term investor in Corning. So he was explaining both aspects of our arrangement on the commercial side.
That means beside the $500 million investment, he's going to be spending maybe side by side with you.
Yes, he's going to be helping us invest in these great factories in the U.S. And then as well as that, he's got an option to build about a $3 billion position in our equity.
We obviously feels the stock's is very cheap right here and going to go higher. He wouldn't have a $180 strike.
Well, I would say that Jensen has pretty good judgment.
I would say that, too. And he also knows that you have a deal with Meta for $6 billion and two other companies, of which you said they have to disclose it, but those are big pieces of business, maybe some of the biggest pieces in America right now.
I'd actually say probably the biggest commercial arrangement ever in my career we just entered into with Nvidia. And then these other two major ones are larger than the Meta deal that's been public on. And I'm sure some of those customers will want to be more open about that over time.
Well, you work at a very storied company, and whether it be storied with something involving Steve Jobs or whether it be storied with what looks to be a $311 bill, Thomas Edison.
That's our bill to Thomas Edison. I keep this in my office. And I keep this to remind me that big ideas come from saying yes to smart people, sometimes in small ways. And that is the original order form that Thomas Edison made upon us to make the very first glass envelopes from which he made the light bulb. And then after we built that relationship, we invented a brand new manufacturing process called the ribbon machine that through time made almost every incandescent light bulb glass envelope ever after we invented it.
No, I love the way you say sometimes you got to say yes. How about saying yes here to Apple? How exciting was that for you? And also kind of mind-boggling to get a Steve Jobs call.
True. It's really a big hunk of our history is we're best in the world at what we do. Right. But we also bring an attitude that when other great innovators want to come and ask us for help, we really say yes. Like this first one, that actually strange-looking product, that was the first cathode ray tubes that we made. Another smart guy named Sarnoff at RCA asked us to help them build television. And that's what we did. And then you just mentioned Steve, another guy in a very famous story that asked us to build a new type of transparent material that wouldn't scratch and would be highly damage resistant. And that right there is actually the very first iPhones with the very first glass we ever made. And we made that in Harrodsburg, Kentucky, the plant that you just visited.
Will I like foldable glass?
I never speak about what my customers
I sure tried, didn't I, though? Can't blame me, not one bit. All right, so let's talk about the lessons that you know.
Sure.
A lot of people say to me, oh, the build-out's ridiculous. It's never going to end, and yet there won't be any customers. Now, you saw, because you've been at Corning since '83, you saw 2000, 2001, 2002, 2003. Yes. Is this not absolutely nothing to do with that? Totally different customers, totally different ideas. Are they even analogous at all?
They're not analogous in any sort of fundamental business manner that you and I know. What I think makes people raise it is the internet was also a significant, major changing type of event, but it wasn't fundamentally about shifting physical infrastructure like AI is. And so I think both are transformational, which makes people say any transformational technology goes through cycles. I think that is true. But I've never seen anything like what it is the world is building for AI infrastructure.
Without fiber, everything's just going to burn too hot, right? I mean, we really have to have fiber no matter what, the way we're going.
Yes, ultimately, for fiber optics, what it's about is very low latency, very efficient power, and very efficient use of space. So copper is spectacular for very short reach. You need fiber optics when you want to go far.
Now, I keep hoping that one day you'll say to me, Jim, 2 miles of copper in these different devices, we have found a way to make it so there'll be no copper. Is that within our lifetime?
Oh, yes.
It is.
Oh, within our lifetime?
Yeah.
Dude, I plan to live a long time. I don't know about you. But yeah, no, definitely. It's on everybody's roadmaps.
Right.
The real question will be, you have to be able to believe in how transformational will AI be. What you see in this recent arrangement with Nvidia is you see the next step in that architecture where they're going to start integrating advanced optical technologies inside the box. So basically, it's now moving. It's not about the fiber that's connecting it. Right. It is literally advanced optical technologies moving inside of the switch box. And so that gives us a brand new opportunity to help manage the light within a domain that today is largely copper.
Isn't it amazing what Nvidia is doing in terms of the ecosystem? I mean, everyone's going to want your fiber, but you want to do business with a partner. I know you're going to do business with everybody. Everybody has to have your stuff. But having a partner like Jensen changes who you want to work with, doesn't it?
Well, what always drives Corning is we want to work with other innovators, right? Who help. We are technical first. And so they're great technologists at NVIDIA, and they help us see the future, and so we can help them make that future be real.
And are there Cornings all over the country that don't have you that can be revitalized by the stuff you're doing?
You know, I thought, actually, you said it best when we were together in Harrodsburg, Kentucky, with Tim Cook from Apple. And what you were struck by is how transformational we are in a small town.
Yeah.
And then how basically that combination of Apple and Corning allow us to create the kind of jobs that people can build whole lives and whole communities around. And the 3,000 new jobs of advanced manufacturing jobs we just announced to support NVIDIA, those are those type of jobs.
And don't forget all the people you have to hire for when I bring my crew down to North Carolina with you and with Jensen, and we show everybody the greatness of what you've created.
I would love to do that. Tell me we're going to do that. That'd be terrific.
It's done. Thank you very much to Wendell Weeks, Chairman and CEO of Corning, a big holding of our charitable trust, and I am thrilled that it is. Mad Money's back after the break.
Coming up, Datadog stock took off like a shot today. So could this be the opening salvo of a software bounce back? It's definitely got Cramer barking. Next.
You can't really teach an old dog new tricks, unless that is, it's a Datadog. Now, you may not know Datadog. It's a software company that helps complex companies observe what's happening in the different parts of their business. They offer a platform solution so you can see when your web pages are down or make sure your procedures aren't compromised. It protects your infrastructure, too. And today, Datadog blew away the numbers with accelerating revenue growth, or ARG, for both its artificial intelligence offerings and its so-called legacy business. In return, the market awarded with one of the biggest trophies I've ever seen, a stunning 31% gain. You think the company caught a takeover bid? It moved like that because finally an enterprise software company shocked people with a magnificent upside surprise, like something from the good old days before this group went out of style and into tatters in the Wall Street fashion show. Think about it. ServiceNow holds an analyst meeting, and the halo lasts for 24 hours, and then Palantir gives you one of the best quarters I've ever seen. Great margins, terrific revenue growth, and yet what happens? Was not enough to prop up the stock. Then along comes the dog, and the whole quarter is devoted to what we've been waiting for. An overview that shows that there are companies that can convert to being AI-first businesses, and ones that its customers love, without leaving behind its old business to run as some sort of old cash cow. It's growing lightning fast, too. So what happens? Okay, Datadog stock happened to be one of the most heavily shorted indices I've ever seen. The index that is for the iShares software ETF. It's known by its ticker IGV. What a travesty. While it's hardly the biggest position in the index, it was up so much today that it had an outsized impact, and maybe like a pit bull or an Atlassian cattle dog, like my Ragu, it pulled up everything by itself. The gigantic Microsoft, which seems to be mired in the low 400s, it explodes higher. Palantir stock didn't go up on its own magnificent quarter. That's all right. The stock index jacked it up 2.4%. Two stocks that shouldn't even be in the index, CrowdStrike and Palo Alto, got the biggest increases of all, up 8% and 7% respectively, just because they've become susceptible to the power of this ETF, because it's they are two large components in it. Usually that's a bad thing. And as my trust as a shareholder in both, the index disgusts me with how wrong it's been. But today, it was terrific. Now, here's what's most amazing about this new wave of buying. This is a market that can't walk and chew gum at the same time. Walking means buying hardware stocks like AMD, SanDisk, or Intel. Chewing gum, that's buying software stocks like Datadog. When I saw the dog soar in pre-market trading, I knew that in advance that it would come at the expense of hardware, because there isn't a lot of new money coming into this market. Without new money, anytime you buy something, it means you got to sell something. The astonishing software gains meant that even the best of the hardware stocks would indeed get hammered, and that's exactly what happened. On Wall Street, they call this a rotation. It's baffling for most. CrowdStrike and Palo Alto have been winning business left and right, but it meant nothing to their stocks until the Datadog barked. Yet that's exactly what happened. Now, does the rotation have staying power? Depends. If another software company in this darn index reports something even slightly awry, then I'd expect the whole move to be repealed as if it never happened. But for the moment, after today, there's a recognition that people have gotten too negative on software, that AI isn't slaying all of them, and that maybe, like those cybersecurity stocks, they never should have been down to begin with. Then money's back after the break.
Coming up, you've got questions, Cramer's got the answers. Get charged up for a fast-fire lightning round. Next.
It is time to turn to the light round question. Wrap from Policy Center stocks that are bought by buy-sell sales to clear to the close. Not credit on the step for his play sale. And then the lightning round is over. Are you ready, Steve? That's on the light round crimson. My number number Sam, Puerto Rico. Sam.
Booyah, Jim.
Booyah, Sam.
Hey, this stock has dropped 20% in the last 6 months. Runs an operating margin in the high teens. Is it time to buy Domino's Pizza?
We got to give it a quarter. I thought that last quarter was not so hot. Technical term for meaning, we're not going to buy it yet. I'm not done taking calls. That seems like a truncated lightning round to me. Let's go to Susie in California. Susie.
Hey, Jim, I just got off a plane in Phoenix. As you guys called me, I'm happy to talk to you guys. Listen, I'm calling about a gold mining stock. It looks like the gold mining stocks are starting to move up. Any prediction in the next 6 months for AEM?
You'd be in the best one. I am not bullish on gold right now. I remember we had the great Larry Williams on, and he said, listen, gold is going lower. I'm with Larry. We had a stuff. And, oh, no, that's it. The lightning round.
The lightning round is sponsored by Charles Schwab. Coming up, could medical supplier Becton Dickinson be the cure for what ails your portfolio? Cramer is getting the diagnosis from the company's top brass. Next.
This morning, we got a strong quarter from Becton Dickinson and Company, which is one of the major medical supply and medical technology companies. After spending the last 5 years with some fine growth, Becton Dickinson really shot the lights out with this one. Huge top and bottom line beat. Management raising the full-year earnings forecast, and that sent the stock up nearly 6% today on a not-so-great day for the market. The company showed excellent execution across the board. They're getting a real boost from all sorts of technology that helps hospitals do more with fewer people. So could this be the beginning of the next chapter? Let's dig deeper with Tom Poland. He's the chairman, president, and CEO of Becton Dickinson Company to find out more. Mr. Poland, welcome back to Mid Morning.
Thank you for having me, Jim.
I got to tell you something. You told us that a more focused BD would produce much better results, and that you had to shuffle things. Yep. If this is what it's going to be like, I think a lot of people are going to want to be in this stock.
But we're excited about this quarter. Certainly, as you mentioned, pleased with the beat on the top, the margins, and the bottom. And we couldn't be happier with the portfolio we've got today. We've got a portfolio that's 90% recurring revenue, number one in 90% of the markets in which we compete. We make 35 billion devices we sell in 190 countries around the world. And we're exposed to some really exciting spaces that are at the cutting edge of healthcare.
Well, it does seem to me that there was an image of Becton before you came in, where it's kind of like dumb stuff that's all over the hospitals. When I look through the catalog, when I look through what you're making, everything is smart. It's AI. It's well ahead of things. And by the way, the biosimilars, there's nothing more aggressive we want in terms of being able to bring healthcare costs down. You're part of the exciting part of healthcare now.
Yeah, absolutely. In fact, some of the key growth drivers for this quarter are in those new exciting spaces. So we saw double-digit growth in our advanced patient monitoring business. These are AI solutions helping to predict where patients are going to go, and so you can intervene before bad things happen. Our biologic drug delivery business, which includes GLP-1s, was up double digits in the quarter. Our tissue reconstruction or tissue regeneration business was up double digits. This is actually helping regrow tissue instead of having plastic mesh in your body for the rest of your life. And we saw the same thing in our home solutions for urinary incontinence, which, again, moving care out of the hospital into the home. That business grew double-digit in the quarter as well.
Now, you still do the kind of nuts and bolts stuff that you're known for, that I know that the gross margins are really good for, right? I mean, that's still a solid business.
Yeah, we still make 35 billion devices a year. We make we're the largest manufacturer of medical devices in the U.S. In fact, 70% of what we sell in the U.S. is made in the U.S. 90% of anyone going into a hospital in America will be touched by our products. And so, again, that's a recurring use of those technologies. Maybe a syringe or a catheter may not be the sexiest to many.
No, but
they're essential to health.
Right, but I like the mixture of the mid to high single-digit growth stuff.
Absolutely.
And the stuff that always is Becton Dickinson. Tell me about this GLP-1. The reason I said it is because when I read it, I said, wait a second, I thought they were all going pill form.
No, I think certainly pills, it's great to see the excitement and the momentum there. But we see injectables are still going to be the durable kind of pathway there.
That's
we
really
see a lot of innovation. Some of the new therapies that also address muscle wasting are in the injectable form. And so, as you said, we have a number of novel molecules in our devices today. We also have more than 80 biosimilar drugs already signed and in our devices coming in the future.
AI medication management, to me, this makes a lot of sense, given the way I have always felt that hospitals don't necessarily order right.
Absolutely. There's a huge opportunity to reduce errors in hospital as well as just lower costs of care, using AI to make sure that medications are always available for patients and are safely delivered. And we're the leader in that.
But meantime, you were happy with the disposal of what went to Waters, right? That's just very different.
I saw you had Udit on, obviously, the other day.
That's why I asked.
It's great to see the business performing well in Waters. We couldn't be happier. It's in a great home. We got a great valuation for our shareholders. They own 40% of the new company. And obviously, we're still partnered now, making sure that stood up properly.
I thought it was great when after I spoke to Waters, I said, Tom's right. This is a very different business. This is the right home, Absolutely. And you did well. You did well for your shareholders. I thank Tom Poland, who's the chairman, president, and CEO of Becton Dickinson, who said it all, and it happened. I love that when someone's a man of his word. Like I said, there's always a bull market somewhere. I promise to find it just for you right here on Mad Money. I'm Jim Cramer. See you tomorrow.
All opinions expressed by Jim Cramer on this podcast are solely Cramer's opinions and do not reflect the opinions of CNBC or its parent company or affiliates and may have been previously disseminated by Cramer on television, radio, internet, or another medium. You should not treat any opinion expressed by Cramer as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of his opinion. Cramer's opinions are based upon information he considers reliable, but neither CNBC nor its affiliates and or subsidiaries warrant its completeness or accuracy, and it should not be relied upon as such. To view the full Mad Money disclaimer, please visit cnbc.com/Mad Money disclaimer.